year? December 2021? November 2020 na? Alafu nyingine? So is there a need for us to do one more? Or you are okay? We do one more. Okay, May 2017. Is it May 2017? May 2017. May 2017. Is it May 2017? Yes, May 2017, question number 5B. So we are doing budgets, and budget and standard costing always must have one question coming. So we are doing budgets, and we're doing functional budgets. Although it has been done, we're just functional budgets. Functional budgets, and our question is May 2017. May 2017, question number 5. 5B. May 2017, number 5. So you can open it. So we're doing May 2017 question number. Ama ulifanya hiyo? Mulikuwa mmepewa assignment? Ama mkupewa assignment? So we're doing functional budgets. Functional budgets is the budget you need to make. A function is a department within an organization or a firm. So we have a department called sales department. They have their own budgets. We have production department. They have their own budgets. Then we have the purchasing department. They have their own budget. So they have to make these budgets. That's why we call them functional budgets. So now we are reading May 2017, question number 5B. I hope everybody is there. In case my speed is too fast, let me know so that I can reduce it. So we have Marimat Limited manufactures a single product branded PQ. So that is the product they manufacture. So the budgeted sales for the month of June 2017 amounted to 10,000 units at a selling price of 2,000 shillings per unit. Additional information number 1, 1 unit of PK requires 2 components, namely X and Y. Component X, number of units, the 5 can be kgs or liters. Then the unit cost of each is 20. Then we have component Y. Number 2, stocks at the beginning of the month are budgeted as follows. We have 4,000 units of finished goods at a unit cost of 50 shillings. Then we have component X, 16,000 units at a unit cost of 20 shillings. And component Y, 9,600 units at a unit cost of 10 shillings. Number three, production cost of each unit requires the following labor hours: department, production, and finishing. Then number four, factory overheads is absorbed into unit cost on the basis of direct labor hours. The budgeted overhead for the month is 1,920,000 shillings. And number five, administration, selling, and distribution overhead for the month are budgeted at 5,500,000 shillings. So number six, the company plans a reduction of 50% in quantity of finished goods at the end of the month, and an increase of 25% in the quantity of each input component. So required for the month of June 2017, number one, sales budget, 1 mark. Number two, production quantity budget, 2 marks. And number three, material budget. Number four, material purchases budget. Number five, direct labor budget. And lastly, budgeted profit and loss account. So now we're going to start number one here. Number one, they want us to do what we call the sales budget. They want us to prepare the sales budget. How do you prepare the sales budget? How do you prepare the sales budget? Anyone who knows? How do you prepare the sales budget? Remember, budget is an estimate, isn't it? So when you're budgeting, you're estimating. Of course, when you're in business, when you have been in business for a while, you can estimate the sales that you can make, isn't it? You've been doing a business for a particular number of years down the line. So you know this is how much I can make, isn't it? So sales budget is the sales estimate, the selling price per unit. So the sales estimates. So we say the sales estimates times selling price per unit. So the unit that you estimate to sell, isn't it? It's very easy. So they estimate to sell, the budgeted sales. The budgeted sales, so the estimate is the same as budget, isn't it? So they estimate to sell how many units? 10,000. At what price per unit? 2,000 shillings per unit. So that one will give you how much? 20 million. So that is how we make the sales budget. Very easy. So the units that you estimate to sell, and then you multiply the selling price per unit. You are done with that sales budget. You can even see the marks allocated. 1 mark. 1. So the sales budget is the units that you estimate to sell times the selling price per unit. Of course, you are the one doing business. You know the units that you estimate, isn't it? You are the one doing business. So yeah. Number two is what we call production quantity budget. Production quantity. So production budget. So production budget. How do you get the production budget? Anyone who can tell us? How do you determine the production? Production, this one is in units. The units that you intend to produce. What is the formula? It has a formula, isn't it? You must have been told. Huh? So you add, it is sales units, isn't it? The units that you intend to sell plus closing, you less opening stock. So these are units, sales units, the finished goods. Sales units finished, then the closing stock, isn't it? So here they are only producing one product called, so the name of the product they produce is called PQ. PQ, isn't it? So they estimate to sell how many units? 10,000 units. Are we together? That is the sales units. Sales. So these are the sales units. And then what is the closing stock? For us to determine the closing stock, we go to note number 6. The company plans a reduction of 50% in the quantity of finished goods at the end of the month. So in other words, the closing stock is equivalent to 50% of the opening stock, isn't it? So we've been given the opening stock, but they are telling us they intend to reduce that one by 50% at the end of the period. So the closing stock would be equivalent of 50% of opening stock, isn't it? So the closing stock here closing stock. 50% of what is the opening stock units? Opening stock units is not number 2. 4,000? 4,000 units, isn't it? So this one will be how much? 2,000. And then we have opening stock, which is how much? 4,000, isn't it? So now here we'll have the production budget, which will be 8,000 units. Very easy. Sawa. Ama ni ngumu hiyo. So that is the units they intend to produce. So the units they intend to produce. Those are the units they intend to produce. Okay, that is 2 marks. And then we go to material usage budget. Number 3, they want us to determine material usage budget. Material usage budget. Material usage budget. So this unit that they want to produce, to produce, they are going to use material, isn't it? So there are 2 kinds of material. So whatever it is that they have asked should be the title of your budget. So they have asked material, isn't it? So that one should be the title. Should be the title. So they use 2 materials. They use material X and material Y, isn't it? Is it so? So each unit of material, so this, we are producing 8,000 units here. These are production units. These are production units, correct? 8,000, 8,000, isn't it? So 8,000 requires this material. It also requires this material. So this material X, 1 unit requires 5, let us say 5 kgs or liters or wherever, isn't it? So each unit requires 5. So what about 8,000? So you multiply by 5. So 1 unit requires 5 kg, let us say kg of material X. For you to produce 1 unit of product X, you require how many kgs? 5. Now, if you're producing 8,000 units, how many kgs do you require? So you multiply, isn't it? And this other one, it requires how many? 3, isn't it? So we will require how many kgs here? So we require 40,000. Let us just say kgs, or you can just write, this is 20 for 24,000 kgs of material X and Y in order to produce 8,000 units. Very easy. Ama? Sio tumeelewa. Then we go to material. Material what? Material purchases budget. So this one can be in quantity plus in units. So the material that you intend to purchase is the material that you're going to use. The formula is material usage. Material usage plus closing stock of raw material. Closing stock of raw material minus opening stock of raw. So that is the procedure. The material that you're going to purchase is the material that you're going to use in production, plus the one that you're going to retain at the end of the period minus what you started with. So as I've said, if they ask you about the particular budget, that one should be the title. So the X and Y, isn't it? So material usage here. Material usage. So they're using how many kgs here? 40,000 kgs. And here they're using how many kgs? 24,000 kgs. What is the closing stock of raw material? We go to note number 6. We go to note number 6 in order to determine the closing stock of raw material. So the company plans a reduction of 50% in quantity of finished goods at the end of the month, and an increase of 25% in the quantity of each input component. So at the end of the month, the closing stock of raw material will be equivalent to 125% of the opening stock. So you're going to add 25% of the opening stock. So the closing stock should be equivalent to that, isn't it? So the closing stock of raw material here, closing stock. So it's going to be the opening stock of material X. That is not number 2, is component X is 16,000 units, isn't it? So 125% of 16,000. What do you get? 125% of 16,000? 125% of 16,000. Huh? This one will be 20. And the other one, the opening stock is 9,600. So 125% of 9,600. This one will be 12,000, isn't it? And then we less opening stocks. Opening stock here is how much? 16,000. And here is how much? 9,600. Then we'll get the material to be purchased in. Yes. Of course, the input is a raw material. Input is a raw material. What you're putting into the process to produce an item, isn't it? It is called the input. Tunaelewana? 44,000. For X is 44,000. For Y? 26? 26,400. So this is the quantity to be purchased in kilograms or in quantity, isn't it? Now purchases can also be in money. So we've been told one quantity of material, 1 kg, one component. Each component requires how many kg? 20, how many units? So you multiply by 20, and then you multiply by 10. So this is in units and in money. This one is in units and in money. So 44,000 times 20, what do you get? So this one will be 800,000. The other one? 264,000. So that is how we prepare material purchases budget. And lastly, they want us to prepare labor cost. So they want us to prepare the labor budget, number 4. The labor budget. So they want you to determine the amount of money they're going to spend on paying wages for the production of these 8,000 units, isn't it? So they have two departments. They have department production. They have what we call production department, and another department called finishing. So those are the departments they have, isn't it? So these production units, these units must go through here. They must pass here. And they must also go through here. So while in this department called production, each unit will spend how many hours? It requires how many hours? 4 hours, isn't it? So here you multiply by 4, and then you get it will spend how many hours in total? So it will spend 32,000 hours. So all these units will spend 32,000 hours in the production department. Each hour they are paying how much? 100 shillings. 100? So you multiply by 100. Unapata ni 3,200,000. So that is the amount of money in the production department. Tumeelewana? So here, each unit will spend how many hours? 2. Sindio? Then here will be how many? 16,000 hours. Let me write here hours. So these are 16,000 hours. Each hour is paid at 140. So total? Uh, 22. 22,40,000. So up to that point, you are through with what we call functional budgets. You have prepared the sales budget, we have prepared the production. So we have quite a number of marks. But we also have the budgeted income statement. So we come here and prepare the budgeted income statement. So prepare budgeted income statement. So I hope everybody is following. Yeah? So here we have shillings, you can put in thousands so that we don't have a lot of big numbers. So budgeted, when you talk about statement, income statement all the time, sales must come into your mind. We must have, so the budgeted sale is 20 million. So we write here 20 million, isn't it? Then we less cost of sales, isn't it? Cost of sales is the opening stock. Opening stock of finished goods, we have been told they had 4,000 units. They had 4,000 units. Each unit is valued at 1050. Sindio? Inakupatia ngapi? So 4,000. So this is a manufacturing firm. You add production, whatever it is that they produce. You add product. So they produce 8,000 units, isn't it? You convert them into money using the same unit, 1050. $8,000. Then you less closing stock. Closing stock, we already had done it. It is how much? 2,000 units. So 2,000 units times 1050. So how much do you get? 2,100. And then you subtract. What do you get eventually? $10,000? 10,500. Then you get the gross profit. You get the gross profit. So when you subtract, you get the gross profit. What's the gross profit? Yeah? 9,000. And then you come here and less note number 5. Admin, selling, and so we have admin, selling, and distribution, which is 5,000, 5,500, isn't it? Then you get the profit or loss. So what will be the profit? 4,000, isn't it? So that will be the end of that question. It gives us maximum marks. So some students will ask, what about number 4? Number 4 says factory overhead is absorbed into unit cost on the basis of direct labor hours. So that one has already been taken into the cost per unit. When you're doing marginal and absorption costing, we determine the cost per unit of the units that are being produced, isn't it? So that one, the fixed production cost is already captured in the cost per unit. So that one you don't again do it. So that is how we should have done that question. It was done in May 2017, question number 5B. We have so many of this kind, but I only recommend you do, there's another question that was very nice question, although it is also in the hand, we check it. We have budgets. So December 2013, I think so. It's a very nice question, question number 4. Can you confirm? Those ones who have past papers that goes all the way back to those years. So the very nice question in December 2013. Can you confirm whether it is true? It is there. Is it December 2013? Just confirm for the purposes of making sure. No, I think it is 2012. It must be December 2012. It is December 2012. December 2012, question number 5B. December 2012, question number 5B. So that one is an assigned. It is those old papers, it is on page 30. Which one? You've seen it? It is on page 36. Page 36. So it is December 2012, question number 5B. So December 2012, question number 5B. Make sure you do it. December 2012, question number 5. Make sure you do it and then you let me see it. And then apart from that, there's another one that I've done in that particular handout that you have. That one was done. It's a very nice question. It was done in June 2004, question number 4. It is written there and the answer is also written there. So make sure you go through it. That is a very good question. So it will not be good for it to be tested and left it in your handout, isn't it? So you attempt also June 2004. It is there. The question is there and the answer is there. So I want you to go through those two questions. So I think now that one you have exhausted, isn't it? We will now do cash budgets. We're going to go to cash budgets. So we're going to do now the next budget. We call it cash budget. So we're going to write here cash budget. A cash budget is a budget that shows So a cash budget is a budget that shows the estimate of cash inflows and outflows. So it estimates the cash inflows, how the business estimates how they're going to get their cash inflows. So now how does the business get their cash inflows? Business gets their cash inflows from sales. Sales can either be cash sales or payments that are being made by debtors from the previous sales that were made on credit. So they get cash inflows from sales, maybe from loans. They can get loans. That is the sources of inflows. They can also get from sale of an asset, or donations. So they are showing you from the budget period that this is how we're going to get our cash inflows. From sales this much, from loans we anticipate to get this much. We are going to sell an asset at this particular point. So those are the inflows. Then we have outflows. Outflows, number one is they can pay suppliers of stock items or raw materials. They can pay suppliers. They can pay for overheads. Overhead include expenditure such as expenditure on salaries, electricity, and other expenses. They can also pay dividends. They can pay dividend. They can buy an asset, or they can as well do what? They can buy an asset, dividends, overhead. They can also repay loan, repayments of loans or other liabilities. So these are the inflows and outflows. So non-cash items are never included in the budget. Non-cash items are never included in the cash budget. We call them notional cost. Notional cost is a cost that does not involve movement of cash. There's no cash in or out. Example include provision for bad debts or depreciation. A notional cost is a cost that does not involve movement of cash, either in or out. Those are never included in the cash budget. A good example is depreciation and provisions. So now we need to know how to make the cash budgets. We need to know how to make the cash budgets. So the first question I'm going to do on cash budgets, there are so many. So April 2023, question number 3C. April 2023, question number 3C. April 2023, question number 3C. April 2023, question number 2C. April 2023, question number 3C. April 2023, question number 3C. So the question reads, Rally Limited is currently following a centralized material storage system. So the company is in the process of preparing its cash budget for the second quarter of the year 2023 and has availed the following data. So given the month from January to June, sales values, material purchases, production overheads, selling overheads, salaries, and wages. Additional information, number one, cash sales are 60% of the total sales. The remaining sales are collected equally during the following two months. And number two, assets are to be acquired in the month of April 2023 and May 2023. Therefore, a provision should be made for payment of 16 million shillings and 65 million shillings for the same. Number three, an application has been made to the bank for the grant of a loan of 45 million shillings, and it's hoped that the loan will be received in the month of May 2023. Number four, creditors for materials purchased are granted 1 month credit after the month of purchase. Number six, number five, I think so. Monthly production overheads include depreciation of 5 million shillings per month. Number six, selling overheads are paid 1 month after the month in which the overheads occurred. Number seven, salaries commission. It's supposed to be sales commission, not salaries commission. Sales source commission at 3% of sales is paid to the salesman each month. Then number eight, salaries and wages are paid monthly at the end of the month. Number nine, an advance tax of 20 million is due in April 2023. And number 10, the cash balance as at 1st April 2023 is estimated as 144,500,000 shillings required. A cash budget for the second quarter of the year commencing 1st April 2022, that is June 2033. So now when you're preparing the cash budget, the first thing is to prepare what we call the data schedule. Once you know how to prepare the data schedule, according to me, you are in a position to prepare the cash budget. What is a data schedule? A data schedule is you're showing how you expect to receive money from credit sales, isn't it? Remember, you might have sold some months back, and the money that you receive from those sales will be within the budget period. So they fall within the budget period. So you must show that schedule so that you can be able to determine whether some debtors will pay within the budget period. So the budget period is a period that covers the budget. Like in our case here, it's from 1st April 2023, 22 to, it's supposed to be 1st April 2023 to June. I think there's a mistake also there. So you see, they are making a budget from April to June, and there are some sales that were made way back in January. Some of them were made on credit, isn't it? So there's a possibility that those sales that were made on credit in January, the amount of money, now the customers are paying within that particular budget period. So you have to show the schedule, how you expect to receive money from debtors, isn't it? So we're going to come here and prepare what we call the debtors schedule. So this is very important when it comes to budgets, cash budgets. So you start making from, so here we have all the months that you've been given. You've been given here January, February, March, April, May, and June. So we've been given this. These are the months. So these are shillings and thousands. So you can write there shillings and thousands. So we have the sales here, the sales that were done. In January, we have 144,000, isn't it? February, 200,000. March, 180, 150. These are already in thousand. Don't reduce it even further. Yeah, 150. Then this one is 205,000, and this one is 208,000. So now we go to the sales, the information on sales or instruction on sales, which is in note number 1. Cash sales are 60% of the total. So these are the total sales. And we're being told out of the total sales, 60% is cash sales. So we eliminate the cash sales here. So we write here cash sales. Cash sales. So this is 60%. So 60% of this value is 144,000. What is 60%? Huh? So it is 6,400 is cash sales here. And then the other one? Huh? So this one, 120,000 would be the cash sales. In March, huh? So this is 108,000. And the other one? So this one will be 90,000. 123,000. 123,000. Next. 124,800, like this. So now the balance will be the credit sales. The balance will be the credit sales. So what will be the balance here? Huh? 157? 157? 600. And the other one? So this one will be 80,000. And the other one? June? 83? June? 83,200. Then next? March, 72,000. April, 60,000. 82. So these are we have been told these are the total sales in the respective months. Out of the total sales, 60% are cash sales, isn't it? Meaning the remaining is, now we check how the credit sales are going to be paid. Credit sales means you've sold, but you've not been given cash. It will be paid later on. So now how is it going to be paid? The remaining sales are collected equally during the following two months, isn't it? So now here we collect, so we say here receipts. So 50% of credit sales, isn't it? Then we also say here receipts, the remaining 50, they are collected equally, isn't it? So meaning this one, the first you collect here, and the remaining you collect in the subsequent month, isn't it? So 50% here you collect here. The remaining 50% you collect here. So 50% here is how much? 28,800, isn't it? So 28,800. And the remaining you collect here, 28,800. So this now we are following the payment of this one, isn't it? So the first 50 have been collected here, and the next one has been collected here. Then now we are here. So the first will be collected here 40, and then the next 40. Then here we have 30, and here 30. Sindio, half of 60 is 30, sindio? Oh, 72, eh? It's supposed to be 36,000, isn't it? And then here 36. Then here 30. And here 30,000. This is 42,000, sindio? So, and the other one is outside the period, isn't it? So now, remember now we come here, we confine ourselves to the budget period. That is the duration which the budget is covering. The budget is covering from April to May. It is how much? 41,000. No, no, it can't be 600. I have 42,000. Where is 600 coming? Which one? This one, 82,000. No, this one. This one is we're not interested. It is now beyond the budget period. It will be paid in August, isn't it? So here we just our budget is covering April to June. Sindio? Hii sasa tunaachana nayo italipo huko August. Ndio. Hii gani? Hii sitalipwa August first batch. Si 83,200 italipwa first one italipwa the next italipwa August, ndio? Ama hii italipwa hii June. Umeshika? So now tutakuja tujiconfine sisi. Budget yetu ina cover between April to June. So our budget period is covering between April to June. Now we find out in those 2 months. So in the for credit sales in April, we are being paid 36 and 40. In May, we are being paid 30 and this one we are being paid. So the receipts from debtors in April will be 76,000. This amount and this one, yeah. So this one will be 76,000. That is the amount we are going to receive. They are going to receive from credit from the debtors in April, the beginning of their budget period. In May, they're going to receive how much? 66,000. And then in June, how much are they going to receive? 70? 42 plus that is in 72. Oh, this is 41. So this one is how much? 71,000, isn't it? So that is, once you have done this, the other things you can even do them. You can adjust them in your final budget, isn't it? So you come here and write the name of the company you are making the budget for. So in our case here, it's called Rally. So right here, Rally Limited. Cash budget for the 3 months. A quarter has how many months? For the 3 months ending, or we can write for the quarter ending June 2020. It's supposed to be 2023. So now you prepare it in columnar form. You prepare it in columnar form here. So you prepare it in columnar form. So here you start with this one is not writing properly. You start with April, May. So there we have April, May, and June. So here you can write somewhere shillings and thousands. Make sure you write somewhere shillings and thousands. So here you start with the balance go down, the opening balance of cash. So the opening balance, note number 10. The opening balance, note number 10. So the cash balance as 1st April 2023 is estimated to be 144.5. Then you write here receipts. You write here receipts. So you are going to receive cash sales. So here we have cash sales. So they're receiving money from cash sales. In April, what is the total cash sales in April? 90. So here we have 90,000. And then in May, how much? 123. And then in June, and then cash from debtors. Cash from debtors. So in April is 76,000. In May, and in 71, isn't it? We've also been told there's also another source of income, which is in note number 3. An application has been made to the bank for the grant of a loan of 45 million, isn't it? And it is hoped that the loan will be received in the month of May. So they also have hopes of getting what? A loan in May. How much? 45,000, isn't it? So there's no any other source. Then here you write here total receipts. total receipts, and then you underline. You don't add. And then here you write here payments. You write here payments. So you go to payments. So payments, we go to the additional information. Additional information number 2. Additional information number. Assets are to be acquired in the month of April 2023 and May 20. So they anticipate to buy assets in 2023 and in May, April and May. So therefore provision should be made for payment of 16 million and 65. So there is an asset, they will buy an asset here. April, how much? 16,000, isn't it? So you write here 16,000, and in the other May, 65. So you write there 65,000. And then we go to the next item, which is note number 4. Creditors for materials purchased are granted 1 month's credit after the month of purchase. So you granted 1 month's credit. 1 month's credit after the month of. So now if you purchase in January, when are you supposed to pay? February, isn't it? So you're given 1 month's credit, isn't it? Okay, some students have some issues there. Creditors for material purchased are granted 1 month's credit after the month of purchase. So if you purchase in January, you have to clear that balance when? February, isn't it? So now here we have creditors here. So you write here creditors. So they are paying creditors. So the creditors, the purchases for January is 50,000, which is going to be paid in 50,000 is going to be paid in 62 for February to be paid in March. Ya March ya 5,500 italipo lini? April, si ndio? So wanalipa 55. Na hapa wanalipa ngapi? Na hiyo ingine wanalipa 74,000, si ndio? So those are the payments they're going to make to suppliers or creditors. And then we go to note number 5. Monthly production overheads include depreciation of how much? So we write here production. So they are paying production overheads every month, but it is inclusive of depreciation of how much? So we're going to deduct depreciation, isn't it? We say depreciation is not part of the cash flow, so it is excluded if it is there. So now in April, the total production overhead was 17,500 minus 5,000. How much is it? 12,000? So what we are saying, they are paying overheads every month, but that overhead they are paying is inclusive of depreciation, is not part of cash budget, so we exclude that one. In May, they are paying 17,700 minus 5,000. How much is it? 12,700. Then in June, they are paying a total of 16,400 minus 5,000. So you get 11,400. So we are through the note number 5. We go to note number 6. Selling overheads are paid. We say that is selling overheads are paid 1 month after the month in which the overhead occurred. So we have selling overhead. How are they being paid? 1 month after so meaning the January we paid in, February paid in, March will be paid in. So those of March is how much? So 15,500, and the other one is 18,900 and 22,000. So we are through the selling overheads. Then we go to we say that is sales commission of 3% on sales is paid in the sales each month, isn't it? So the total sales every month attracts a sales commission of how much? So we have sales commission here. So in the month of April, the total sales in the month of April is how much? 3% of 150 is how much? 4,500. And then now in May, the total sales in May was 205,000. Huh? 3% of 205? 61? 6150. And then the total sales in June was 208,000. 3% of that one is commission. Eh? 6240. That is the sales commission. And then number 8, isn't it? Number 8, sorry. Salaries and wages are paid monthly at the end of. So we have salaries and wages. So it's paid on a monthly basis, isn't it? So salaries of April, how much is it? 36,000, isn't it? 36,000. The other month is 40,000, and the other, lastly 48,000. So we are through with note number 8. Note number 9, an advance tax of 20 million shillings is due in. So April they will pay nini? Watalipa nini? Tax of how much? 20,000. So now we are through with that one. We are through with everything, and then you write here total payment. So we add this receipts, and then another person, another group to add the payment, total payments. Then here we have, this is A, and this one you can write B. Then the balance carried down, the closing balance is A minus B. So we add this one, another person to add the payments. 310. So this one is 310, 500. This? No, we go one month by one. We go one by one. Total payments, first of all, must get the closing balance in any given month is the opening the subsequent month. $155,000, you know. So the closing balance will be how much? Eh? 155, 500, you know. So this is going to be opening balance here, 155, 500. The closing balance in any given month is the opening balance in the next. So again, we do it. We add all the receipts, and then we add all the payment, we get the difference, which is going to be our opening balance in June. 389, 500. Payments. Two or three? 203.3. The closing balance 186, 150. This is going to be our opening balance 186, 150. Then we do the same. Eh? 381, 950. 161, 640. The closing balance is how much? 220, 310. So that is how we make the cash budget. So this one will be the budget, cash budget. So this is how they anticipate to get their cash and how they anticipate to spend the same during that period. So this is very relevant, cash budgets, very relevant. Any question? So you can write that one very fast before we do another one. do another one? Okay. So December 2021, question number 4B. December 2021, number 4B. So we want to do another question, December 2021, question number 4B. So December 2021, question number 4B. 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 So the question reads, you're in charge of making forecasts and preparing budgets for Cond Limited. You've been supplied with the following costs and revenue forecasts and details for payments. Additional information. Number one, cash balance on 1st April 2022 is expected to be 90 million shillings. Number two, the period of credit allowed by suppliers average is 2 months. And number three, debentures worth 125 million expected to be issued in May 2022, and the amount will be received in the same months. Number four, a new machine will be installed in March 2022 at a cost of 150 million, and payment is expected in May 2022. Number five, sales commission of 3% is payable after 1 month of sales. And number six, a dividend of 100 million is to be paid in the June 2022. Number seven, there's a delay of 1 month in the payment of overheads and wages. And number eight, 20% of the debtors pay cash, receiving a cash discount of 4%. And 70% of debtors pay within 1 month and receive 2.5% cash discount, while the remaining debtors pay within 2 months without a discount. So it means all the sales are on credit, and you have been told how the payments are going to be made. So we're going to come here with the debtors schedule. So the first thing here, we come here with the debtors schedule. Debtors schedule. So the budget, the requirement is a budget from April to June, isn't it? So we have been given the sales all the way from January. So we have sales for January, February, March, April, May, and we have sales for June. We have sales for June, isn't it? So we have the sales here. We're going to write here sales. So sales for, these are shillings and thousands. Shillings and thousands. So sales for January is 360,000. Can you see it? 360. This other one is 350, 440, 350, 360, 300. So all the sales are on credit because there's no way we've been told there's any cash sales, isn't it? So all the sales are on credit. So now we go and follow up the payments. Go and follow up the payments. The payment is in note number 8. 20% of debtors pay in cash. receive a cash discount of how much? So here we have 20% of debtors, 20% of debtors. So we identify 20% of debtors first. 20% of 360 is how much? 20% of 360. So this was 72,000. So this one will be 72,000. And this one will also be 72,000. This 350, 70,000. So this one will be 70. This one will also be 70. 88,000. So this one is 88. So these are the 20%, but that is not the amount of money we're receiving from them, isn't it? So now receipt, you write here receipts, 20% debtors, isn't it? When are they paying? 20% debtors pay in cash. They pay in, so meaning they pay the same month they buy, isn't it? So, but they're paying 96%. They're given a discount of how much? 4%. So the amount owing, they pay how much? 96%, isn't it? Of this amount. So 96% of 72,000 is how much? 69,150. 69,150. This other one, 67. And here 67. 7,200. This other one, it's not 150. This one is not 150. 69,200. This one is like this. 96% of 72,000 is how much? 69,100. So this one is 69,120. 69,120. This one is okay. Eh? 34. 84. 480. So now we have dealt with the 20%, isn't it? Then we go to the next. Then 70% of debtors pay within one month. So we have 70%. So we get the 70% first. 70% of debtors. So 70% of the initial amount of 360. So 70% of 360 is how much? 252. So this one will also be 252. 252. This other one, February 245. I hope you've taken of 350, isn't it? This is 245. Then 70% of 440. 30. Now we see the receipts. The receipts, 70% debtors, isn't it? So they are paying less discount of how much? 7 point. So they are paying less discount of. So they are paying 97.5. Is it so? They are paying 97.5. If you deduct 100%, 2.5, so they are paying 97.25, isn't it? Within 1 month. What does it mean within 1 month? If you bought in January at the beginning and you're paying within 1 month, when are you supposed to clear your balance? No, within that month. Ukilindwa January na ulipe within 1 month, unafaa ulipe January. Our assumption is you're buying at the beginning. So you 1 month unafaa ulipe end of January. Ukiruka hiyo February utaenda paka. So itakuwa ni 2 months, ndio? Ndio? So you're paying the same months, but now, so unapata ngapi? So here it is. This now we're paying this of 252,000. 97.5% of 252,000 is how much? 245, 700. 245, 700, isn't it? 245, 700. And this other one, 97.5% of 245,000. 238, 870, 238, 875. Are we together? And then now in March, 300, 300, 300, 300, 300 like this. So we are through with we have now dealt with 90% of data, isn't it? 20 and 70. It gives us 90. And then now we're being told why the remaining data is paid within 2 months without a discount. So that is 10%. So right here receipts. 10% data, isn't it? The reason why I had to isolate first and then write receipts, it is because that the payment had some discount, isn't it? This one have no discount, so I just write receipt 10% data, isn't it? So 10% pay within, when are they paying? 2 months, isn't it? So it means January you have to clear on in February, isn't it? So 10% of 360 is how much? 36,000 will be paid here, isn't it? Then now here it's 35,000. Now here 44,000. This one is 35, isn't it? This one is 36,000. So now we come here, we confine ourselves in the budget period. The budget period is from April to June. So where they have written receipt, we only add where they have written receipt. Here we add this one. And then we also add this one and this one, isn't it? So we only added this, and this, and that. So those are the receipts, amount of money being received in those months. So can we add it? Last one is 350, 350, 820. And second last, 349, 820. 349, 820 is the only one adding. Is correct. The next one, April. $350. So those are there. And then now we come and write. Now we are through with everything that we need. The others we can adjust them. So here we come here and write here Condele Limited. So we write here Condele Limited. Cash budget for the quarter ending, for the quarter ending. When is it ending? June 2022. Condele Limited cash budget for the quarter ending June 2022. Then here we have, so those are which months? We have, which month is this? April, May, and June. So you can write somewhere shillings and thousands. So April, we have April, May, and June. And then here we write here. So here we have the balance brought down. So the balance brought down. The cash balance, what 90, which is the same as 90. Then here we write here receipts. We have cash from debtors. So in April, they are receiving how much? 300,075. This one is 349, 820. And this one is 350, 820. Then we check whether they have another source of we check whether they have another source of income. So another source of income is which month? Note number 3. Debentures worth 125 million are expected to be issued in the May. A debenture is a loan. A debenture is a loan to the company. So there is a loan of how much? So debenture, it's a loan of 125 million, isn't it? Which is being received in the month of, so 125,000, isn't it? So they don't have any other source apart from those two. Of course, when you're doing business, those are the main sources of income for you. Your sales and maybe loan. So here write your total receipts. Then here we write here payments. We write here payments, correct? So now we go to the payments. Note number 2. Note number 2. The period of credit allowed by suppliers averages 2 months, isn't it? So if you bought in January and you're given a credit period of 2 months, our assumption is you're buying at the beginning of the month. So when are you supposed to pay? February, sindio? Sini kweli? Kama umenunua January unafaa ulipe February. Sasa January ikianza paka juu hiyo mwezi moja, sindio? February tena ianze tena paka mwisho, hiyo ni miezi ngapi? 2. So unafaa ukilie lini? February. So January you pay February. Sindio? Ama ni March. March itakuwa miezi 3, sindio? So now we go. We have, of course, now direct materials. Suppliers are supplying raw materials. So we are saying January is paid in February. 112,000, isn't it? Are we together? Then February is paid March. March is paid. So here we have creditors or suppliers. Suppliers, here we're paying how much? 135, isn't it? So we're paying here 135,000, and here we're paying how much? 90,000, and here we're paying 67,000. So we are through with note number 2. Note number 3 we have done. We go to note number 4. A new machine will be installed in March 2022 at a cost of 150 million shillings, and payment is expected in May. So here we have a machine. It's going to be paid in, how much is the money value? 150,000. We're through with that machine. Note number 4. Note number 5, sales commission of 3% is payable after 1 month of sale, isn't it? So there's a commission of sales on the total sales that is paid in the subsequent. So the one for January is paid in February. February is paid in March. March is paid in. So we have sales commission. Sales commission. So April, March, the total sales is 440,000. 3% of that one is how much? 30,200. 30,000. So a sales commission of 3% of 440,000 is 13,000. So 13,200, correct? We have the sales for April, which is 350,000. Attracts a commission of 350 payable in May. So how much is that? 10,500. And then the other one is 360, 3%. 10,800. We are through that one. Note number 6. A dividend of 100 million is paid in June. So they are paying a dividend in June of how much? 100,000, isn't it? Number 7. There's a delay of 1 month in payment of overheads and wages. So we start with wages, isn't it? So in other words, the wages for January is paid in February. So here we write here wages, correct? So that one of March is paid in April. So the March is 100,000. Umeona? The wages for March is paid in April. 100,000. The April nalipwa lini? May, 72,000. That one of 54. thousand, isn't it? Then we have overheads. We have overheads, so we can add all the overheads here. So we can write here overheads, isn't it? So they behave the same way. So the overheads of March will be paid in April. So we can add them together. So March, we can add 40 plus 27 plus 18. 40 plus 27 plus 18. How much is it? Huh? 85. So 85,000 will be paid here, isn't it? So this 85,000 is arrived at, we have accumulated all the overheads in March, isn't it? Which are delayed in delayed payment for 1 month. Then for April, we pay in May. Can we add 82? So this one is 82,000. The other one, 72,000. So I think we have finished everything, apart now from getting the balances. So that is how cash budget it can be done. So here we write here A, and here total payment. Right here total payments. Total payments. This is B. So balance carried down here, it is A minus B. So can we add? This is for 440, 075. And the other one? Triple 3, 200. The balance carried down. 106, 87. So here we write here 106, 875. $581, 690. $404, 500. The difference? 177, 195. So 177, 195. And then we do it. $528, 015. Eh? 303, 800. 224, 224, 215, like this. So that is how we do cash budgets. We have so many questions of cash budget apart from this other one. So you do, you attempt, and then you forward them. So you can start reading for those ones who have not started, still have a lot of time. You can do these things even a million times if you so wish. So now, the first assignment, or you don't want assignments? So we want assignment, isn't it? May 2016, question number 4. May 2016, question number, attempt. May 2016, question number 4. May 2016, question number 4. May 2016, question number 4. You also have May 2016, question number 4. And then another one. Hii yangu hebu nisaidie kipasuo pako kidogo. So there's also another question in May 2015. May 2015, question number 5B. May 2015, question number 5B. May 2015, question number 5B. You can attempt that one. And then you can also take May 2017. No, 2017 tumefanya hiyo. Tumefanya hiyo. Kuna swali lingine inakuwa hapo mzuri. November 2016, question number 5. November 2016, question number, November 2016, question number 5. November 2016, question number 5. November 2016, question number 5. So those are questions on budget. So we are remaining with flexible budget. We'll finish it up. And then we do our last topic, which we call cost methods. So you also go and read on the differences between budgeting and forecasting. The differences between budgeting and you need to know what is a budget and what is a forecasting. So that is our end of our class today. Thank you very much.